Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a look at two companies today, two companies working in the sports ecosystem and the sports betting ecosystem, really. And I've done a bunch of videos on these companies before, so I won't go into too much detail about what they do. So watch those videos. I'll link them down below if you want more detail about this business model. But essentially, these are companies that work within the sports ecosystem. They make deals with sports leagues, think the NBA, the NFL, to purchase their official data rights for all of their statistics, and then they take those data rights and they go to the sports bookmakers, think FanDuel, DraftKings, etc., and they sell those official data rights to those companies. And those deals are usually structured in a way such that Genius Sports or Sportsradar, the two companies I'm talking about today, generally take a small cut, a very small cut of any net gaming revenue that those companies make. So any data that is not live in-game data, they'll take like 1 to 2% maybe max of net gaming revenue of any bets that are placed. And then for live in-game data, so live in-game bets, which are becoming more popular in the US today and are about 50% of the betting world worldwide, they take closer to 5% of those bets. And again, it's net gaming revenue, it's not gross gaming revenue. Generally depends on the contract, but that's essentially the business model. On top of that, they have an advertising business, sports technology business. They have a ton of sports data that they can use for advertising. They work with a bunch of teams for sports data analytics. They work with the leagues themselves for betting integrity, and that's really their business model. And this business has been kind of interesting to me for a while. That's why I've done a bunch of videos, but it's really only started to get rewarded now as the earnings of these companies have been really, really solid recently. And that's evidenced by the performance in the last month or so. The Genius Sports earnings just came out a couple of days ago. Stock is up almost 20% since then. If you look at the 1 year performance, it's up about 90%. And this is a top 10 position for me, so I'm very happy with that. Again, I've been a buyer since the $2 to $3 range. I feel like a fair price point is in that $5 to $7 range. I have always felt that way. I haven't been buying a ton in that range because I already own a sizable position, but now that these earnings are getting better and better and better and margins are expanding, it's becoming more interesting. Now, one thing to remember, this was a SPAC and it did the SPAC thing in 2021, so it's still down in the past 5 years because it kind of went live at a very overvalued price. To me, it felt like for the benefit of the company, though, they raised a bunch of money then at a very, very attractive valuation from the side of the company. So that was a good thing for them, not really a good thing for investors. So if you're an early investor in Genius Sports, at $10, if you bought at SPAC price, you're basically flat. But if you were buying into the early hype, you're not doing too well. Sportsradar does the same thing. It's a bigger company right now than Genius Sports. They have a bit more leagues, a bit more mature, $5 billion company. Again, really good earnings. Due released just a couple of days ago, up 65% in the past 6 months. Most of that in the recent couple of weeks. Year to date, up 57%. And again, this is the same story. This IPO'd at around the same time. Not a SPAC, just a general IPO. They raised a bunch of money at, probably like a $8 to $9 billion valuation. Shouldn't have been valued there, but 2021 was a time of exuberance. Fell a bit. I've been a buyer of this stock in that $8 to $12 range. Now it ran up a bit, so that's a bit disappointing for me because I wanted to build this position out a bit more. But again, maybe it'll take a bit of a breather and come back down to earth. I'll take a look at valuation, but really wanted to see what's going on with these companies and take a look at the earnings. So let's start with Genius Sports earnings. Really solid, exceeding guidance again on the revenue side, exceeding guidance on EBITDA. Margins are expanding by 400% on a year-to-year basis on the EBITDA margin side. They're raising guidance for 2024, guiding and reaffirming positive cash flow for the full year 2024. So this will be the first time where they're actually generating cash flow. Again, this is a business that's kind of inverting into a profitability area, whereas it before was sort of in that we're investing a bunch of money in growth. We spent a bunch of money on contracts, etc. And the big part of this business is, how can they take those contracts with the leagues that they spend a bunch of money on and bring out the value from those contracts on the other side? And I think, Genius Sports does a pretty good job with that. Sportsradar do a pretty good job with that. They're renewing these global sports books. They're seeing pricing uplift across the board. They're introducing their BetVision product. They're adding advertising spend from those sports books within their advertising network. And they're also benefiting from the fact that, hey, we're getting 1 to 5% of net gaming revenue on a revenue base that's growing at 30% plus globally in the sports that they're in, 60% year over year growth in Q3 US betting revenue on their end. In-play revenue is growing, and like I said, they are seeing more money from in-play bets than pre-game bets, so that's good for them. And they're really kind of using their technology platform to empower the sports books, to empower users, to make people place more in-game bets. They've got that BetVision product, which is sort of, hey, you go on your app, if a game is local to you, you can watch it within the app. You can sort of place these automatic live bets within the app. And again, that's good for a company like Genius Sports because they make more money from those in-play bets. They've got a technology platform where they work directly with teams, directly with television networks, television channels, streaming platforms, etc. There's some examples of, hey, we partnered with the LA Rams in their stadium to sort of introduce this audiovisual aspect of the game. They have audiovisual partnerships with some TV channels. If you're familiar with something like RomoVision, Genius Sports is the company that does that. And they have this, advertising platform that isn't really growing super fast right now, but they just introduced something called Fan Hub, which is sort of a trade desk of sports as they explain it. That'd be a good thing if they could figure that out and make that work well. But it's essentially a DSP, a way for people to buy highly targeted advertising. They have all of this sports data, all of this betting data, because they do some managed trading services as well, where they sort of manage the betting process and the like for the sports books. Sportsradar does a lot more of that than Genius Sports, but Genius does a little bit. So they have all of this data, all of this real-time data that they're using, how people are betting, where they're betting from, what they're betting on. Can they use that to target users, to help advertisers target users directly? Maybe, but I think not a lot is really baked in on that front. When you look at their technology platform, when you look at their advertising platform, they're there, but I think most users, most investors are looking at this company as like a sports data rights betting company. And they're sort of saying, well, this other stuff could work out, but it doesn't really have to for us to make money. When you look at Sportsradar, I think you're sort of seeing the same thing. And again, this company is much bigger. It's almost $1 billion company in terms of revenue versus $500 million for Genius. And this is still growing at 27% year over year. Really solid growth, starting to generate really strong momentum on the free cash flow side, raising full year outlook. So the earnings here were fantastic. And the nice thing about Sportsradar, and they really focused on this, is they have all this partnership, all of this data, media, tech partners, betting operators, partnerships with a ton of leagues. It's not just the big ones, it's also a bunch of small ones. So if you think about the partnerships that they have, Genius Sports has the NFL and the English Premier League, probably some other ones that I'm forgetting. Sportsradar has the NBA, ATP, F1, UEFA, FIFA, NHL. I think MLB is up for negotiation right now. But the important thing about these deals is that they're expensive, that's for sure. The NFL cost a bunch of money, but they're relatively static on a year-over-year basis. For example, if you sign a deal with something like the NBA, let's say it costs $800 million over 8 years. That's not the right number, not the right length, but that's just an example. In year one, you're paying $100 million. And that is relatively static through the life of the contract. So you're going to pay $100 million, which may be a lot higher than the deal you were paying, than how much you were paying for in the last deal. But by year 8, you're still paying $100 million for those rights. However, your revenue in that time is going to go up quite a bit. So what happens with this type of contract negotiation is that the margins have a tendency to start to improve really quickly when that cost base on the sports rights side remains relatively static and the revenue keeps going up and up and up. And that's kind of what they're showing here. We've got all of these major deals signed for basically at least 6 years on average. Outside of UEFA, they have to sign the MLB deal. So yeah, our sports rights this year went up quite a bit because we signed the ATP deal, we signed the NBA deal, and those were much more expensive than they were before. But that cost base is going to be relatively steady. We have the ability to control the rest of our cost base, and that means our margins are going to improve quite a bit. And again, they talk about their own sort of stuff that they do. They do a lot of managed trading services here, $35 billion in managed trading services turnover through their platform. So that is pretty impressive. That's something that they do much more than Genius Sports. They have an advertising platform. That's kind of what happens here. What you're seeing is you've got sports rights going up quite a bit on a year-over-year basis. But despite that, despite the fact that their sports rights are almost doubling, their margins are remaining steady, and in fact, in this quarter are kind of inflecting into positivity despite those new deals that they're signing. And if those sports rights, which are 40 to 50% of their costs for the next couple of years, for the next 6 years or so on average, as evidenced here, are going to remain steady, and their revenue grows by 10, 15 to 20%, whatever it grows by, their margins are going to improve. They're going to generate a lot more free cash flow. And Genius Sports is also moving in that same direction, where those sports rights are locked in for a couple of years. My worry there is that the NFL deal is up in 28, so a bit sooner. And these deals do cost a lot more money. Like the NBA deal is basically double what it was before. So when they do sign these new deals, that is a problem. One of the concerns that investors will always have is that what happens in 2030, for example, for Sportsradar, when all of these new deals are up for renegotiation? Well, they're going to have to pay more is what happens, but hopefully they can renegotiate with their global bookmakers to get better deals as well, to sort of keep that revenue going up and up and up. There's always going to be the risk of, hey, maybe the NFL wants to go to a different partner. Maybe Sportradar will compete with Genius Sports. Maybe, just maybe, the NFL will sort of pull that stuff inward because the NFL can kind of want to keep a hold of its own data. Who knows what will happen, but that's the risk you're taking as an investor. However, at this moment, looking forward, I feel like there's a pretty decent path in both Genius Sports and Sportsradar to improve their margins. So as we look at valuations, let's start with Genius Sports. I've kind of played around these numbers. File, make a copy to play around with the spreadsheet if you'd like. Keep in mind, I'm probably being a bit aggressive here in terms of margin improvement. I'm going from 3 to 15%, continued growth in that high teens to low 20s range for the next couple of years. I do have a negative 100% buyback. One of the risky things about this company, Genius Sports, and one of the things that worries me is that right now there's 211 million shares outstanding. However, the NFL, within their initial deal, got about 20 million in vested warrants that they could execute at about a cent. So anytime they could flood the market with 20 million additional shares, there's about 20 million additional unvested RSUs and PSUs, but if the price keeps going up, those will become vested. So you'll see some dilution, some significant dilution, 20% in dilution, in fact. So that's why I have this buyback at negative 100%, despite the fact that they're going to generate free cash flow. On top of that, they issue quite a bit of stock-based compensation. That continues to be the case. It'll be hard for them to actually reduce the share count anytime soon with all of this coming up. So keep that in mind. If you want to put a margin of safety of 20% in there, gets your fair value to about 770. Right now, I have it right around where it's trading today. For me, it'd probably have to go back into the sevens for me to buy more, but I can see why the market is valuing it where it is. However, keep in mind that the market is being very aggressive on a lot of things right now, so things could see a pullback. As we look at Sportsradar, similar assumptions here, more of a buyback here. They do have some stock-based compensation. The NBA does have some shares that they could execute. I think they own about 3% of the company, so there could be some dilution there as well, but they are starting to buy back shares. Their balance sheet is really good. They have about $350 million in net cash. Again, both of these companies IPO'd at the right time. They raised $500 million in cash from their IPO, and they used that to acquire companies, to grow, and do a pretty good job in taking advantage of a market that was very attractive to the company that was going public, not the investor that was investing in those companies. So that's where they are right now. But now that they've pulled back, probably in a better spot to acquire the company if you're interested in it. For me, though, again, I own quite a bit of Sportsradar. I think they'd have to pull back into that $12 to $13 range. They probably won't, though. I think the earnings here were very, very good. I like the earnings from Sportradar a bit more than Genius, and this company looks very interesting to me. And if it does start pulling back even into that $15 to $16 range, I may acquire some more shares. Disclaimer, as always, this video is purely for informational, educational, and entertainment purposes only. It is not investment advice. Do your own due diligence. But again, both these companies, very interesting. One thing to keep in mind, though, both are overseas companies. Sportsradar is Swiss. Genius Sports is in the UK, so there's some currency stuff that you'll deal with since their business in the US is growing quite a bit. What's the upside here from some of these earnings? Well, more states could go online in the US. The nice thing about this business model is that, say, California goes live, DraftKings, FanDuel are going to spend a bunch of money to get into that market. These companies don't at all. They just already have deals with those companies. The more money that DraftKings makes, the more money that FanDuel makes, the more money that their partners make, the more money they make. Brazil might be legalized in 2025. There's a bunch of stuff going on there. Probably won't see a lot of that until the latter part of 2025. I don't think there's any assumptions baked into that, but there's certainly some upside there if more countries legalize. A bunch of countries in Asia still not legal. Bunch of states still not legal. Texas and California being two big ones that could in the future provide quite a bit more additional revenues, not only for the betting companies, but also these companies that are sort of in the middle of the leagues and the betting companies. And again, they have this technology platform, could expand quite a bit. They have this advertising platform that certainly is robust in terms of the data they have on people to advertise to. It's just, can they really expand it really, really well? So what is the risk here? Well, again, the risk is these sports rights are expensive. These contracts expire eventually. They're going to have to pay a lot more for extensions, compete with themselves, compete with other players. This is not a duopoly. There's some smaller players in there. IMG Sports Perform, I think, is another one, and a couple of other smaller players. Their technology platforms are very cool, but right now they're not really performing amazingly. It's a lot of betting growth. What happens when that betting growth slows down? You have to keep that in mind. And obviously, there's also that risk with the 20% dilution that's potentially there for Genius Sports. In the past, these guys were also owned by Apex Partners, a private equity company, but luckily those guys sold out right around July 24. And what happened then? Well, the stock price started going up because their selling pressure wasn't there anymore. This was probably a pretty good time to buy. A little bit of a downturn here. And then as you look at Sportsradar, similar concerns here for Sportsradar. Again, great company, but 39% of these shares are owned by the Canadian Investment Trust for some reason, pension fund rather, not trust. Another 30% or so, 25% or so are owned by venture capital companies or hedge funds. So these companies could obviously just decide to sell, put some selling pressure. So there's very concentrated ownership in Sportsradar, some dilution potential in Genius Sports. But I think the market is starting to finally see the value in these companies. The fact that if you look at their growth here, it's still going to be there on the top line as betting expands, as their services expand, as they sign new sports deals. But now they're finally moving into positivity on the EPS side, positivity on the free cash flow side. They can maybe start buying back shares a little bit, take a bit of that stock-based compensation dilution off the table, which has worried investors, make acquisitions. And I think kind of just be a business that is now free cash flowing and has the potential to keep growing, acquiring, etc., and existing as a valuable part of the ecosystem in the sports leagues, and not only in the betting ecosystem, but hey, the sports leagues themselves, the advertisers that want to target sports fans, and all the technology that goes into the audiovisual aspect of those sports. That's where I am with these stocks. I own, again, both of these stocks make up close to 10% of my individual portfolio, so I'm not in a rush to buy more, but I'm also not in a rush to sell. I think there's plenty of upside in both. However, if I were to buy more, I'd probably have to be closer to the sevens for Genius Sports, probably have to be closer to the $13 to $15 range for Sportsradar. Based on the last earnings, I probably like Sportsradar a bit more. There's a bit less risk with them, I think. Obviously, the risk of concentrated ownership is a problem, but as far as their contracts go, as far as their cash flow position and their possibility for margin expansion goes, there's a lot more runway there until the 2030s, whereas Genius Sports has that NFL contract coming up in 2028, which is a bit concerning for me, but still a very interesting company. Their advertising business could really go a long way. They have their deal with X, I think it's called Trend Genius. They're always signing new deals with advertisers, with teams, with sports books, and that's kind of where the business is heading. It's like, how can they effectively take the data that they have, the tomes and tomes of data that they have? You're talking about million plus sporting events every single year, tons of betting data that they have, and utilize that on the technology side and utilize that on the advertising side, because that's where the upside lies. The market already knows that they have the data rights and they're going to benefit from betting growth, but if they can really grow on the advertising side, grow on the tech side, the upside is much more than what I'm showing here, much more than a 10% return from today's prices, much more than a 9% return, whatever, from today's prices. So play around with the spreadsheet. I'll link it down below. Hit file, make a copy, etc. Let me know what you think about these companies. I do like the betting companies as well. FanDuel, or Flutter Entertainment that has FanDuel, DraftKings that has DraftKings. I've owned both of those stocks before, do not own them now, but I do own these stocks. And as always, guys, this is not investment advice. Do your own due diligence, etc. Thanks for watching. Leave a comment down below to tell me what you think about these companies. Are you an owner? Are you thinking about buying, etc.? Again, quick overview of these companies, even though this video somehow stretched into 20 minutes. So if you want to see more about either of these companies, I will leave a link down below about them. So take a look at those as well. And thanks for watching. Bye.